Global conflict appears to be intensifying, and markets are beginning to price in sustained instability. In the forex space, safe havens are gaining strength. The US dollar is showing signs of resilience, not from economic health, but from global risk aversion. Expect the dollar to strengthen against weaker currencies, especially emerging market pairs. The yen may also regain momentum as capital flees volatility. The euro remains exposed due to Europe's geographic and energy vulnerabilities. Continued pressure on the ECB and slowing European indicators could drag euro to US dollar lower. Commodity currencies like the Australian and Canadian dollar may see mixed performance, propped up slightly by commodity prices, but held back by risk-off capital flow. In crypto, uncertainty is fueling speculation. Bitcoin is showing classic risk hedge behavior, but any major surge remains fragile. If conflict escalates quickly, BTC could push toward recent highs. However, liquidity in altcoins is thinning. Expect sharp swings, pump-and-dump activity, and sudden sell-offs on bad news. Ethereum could hold if institutional confidence remains, but everything below top 10 market cap becomes extremely risky. Volatility remains the theme. This is not a market to chase, it's one to survive. Subscribe for more insights on a daily basis from Economics Now. Emerging market currencies are entering high-risk territory. As global tensions rise, investors are pulling capital from riskier economies and moving toward stability. Currencies like the Turkish lira, South African rand, Argentine peso, and Indian rupee are seeing volatility spikes. Weak fiscal positions, reliance on foreign capital, and political instability are being punished. In particular, the Turkish lira remains exposed to policy unpredictability. South Africa is dealing with commodity fluctuations and internal grid issues. Argentina faces chronic inflation and debt restructuring pressures. Meanwhile, India's rupee may hold firmer due to stronger growth and reserve buffers, but it's still vulnerable to global outflows if risk sentiment collapses. High U.S. interest rates are compounding the stress. Dollar strength means emerging nations face higher debt servicing costs and tighter liquidity. Watch central bank reactions. Many are raising rates to defend currencies, but that's a short-term defense with long-term side effects. Volatility in emerging forex is not just technical. It's geopolitical, economic, and systemic. Traders should hedge carefully or stay on the sidelines if exposure is unclear.